and welcome. You're watching Your Trades on ET Now. I'm Shrishti Sharma and with me today is Snehi. And viewers, this is the weekly edition where we're going to be taking you through all the top stories for the week, and not just that, we'll also get you ready for the upcoming week because that's going to be indeed exciting. But before that, let's have a look at how did the market shaped up in the week gone by, because though it was a truncated week, but the benchmark indices continue to decline and follow the trend, because Nifty was seen to be breaking that crucial support of 19,300 on the lower side, while Bank Nifty too was on the back footing. But when it talks about the India wicks, we have seen that rising, moving above that 18.5 levels and back to May 31 or May 31 levels. But clearly a stock specific action was all over, because when it comes to the Q1 FY24 earnings, then that is completely behind. But a lot many companies have seen upgrades as well as downgrades. In terms of the highest EPS upgrades coming in, we have seen stocks like Zomato as well as PB Fintech making into the charts, and on the downgrade side, V-Mart and Sagar Cement were the counters that were seen to be disappointment. But Snehi, it was a heavy week in terms of the macro data as well, isn't it?
Absolutely, Shrishti, heavy week coming in terms of the macros as well. And we've also seen that the India's CPI number came in at over 7%, and we've seen above the RBI tolerance limit, and FOMC minutes were released signaling another rate hike. And the spike was seen in the dollar index as well. So that's what the macro front looked like globally as well as on the domestic front. But the other highlight that came during the week that went by was the ITC demerger. And the demerger, there was some clarification that the street received, and it said that the ITC shareholders will hold about 60% direct stake in the company, and ITC hotels will hold about 40% stake. And they also said that for every 10 shares held in ITC shareholders will get 1 share of ITC hotels. And also the big news on Friday was the Nifty Next 50 index reject coming in with exclusions as well as inclusions. And exclusions included the likes of Nykaa, HDFC, AMC, Page Industries. All these stocks were down in trade on Friday. On the other hand, inclusions also included names such as Shriram Finance, Trent, TVS Motors, Punjab National Bank, Zydus Life. All of these stocks saw sharp gains coming in on Friday 50.
Okay, so that's how the markets panned out. But coming week is going to be indeed a crucial one. Why so? Because there are a lot many questions that we will be putting to our experts. So let us first take you through all the top points that we're going to be discussing in the next 30 minutes. Firstly, we'll talk about the range of the Nifty, because for Nifty 50 index, we were trading in quite a tight range in the week gone by, though the trend was clearly on the downside. But will Nifty break this range on any of the sides? We'll watch out for that. But a lot many excitement on Friday itself we have seen coming from Reliance, because Reliance Jio financial listing, the date has come out, and 21st of August. What investors should be expecting out from that, we'll discuss on that. And new kids on the street, TVS Supply Chain, Pyramid Techno as well as Aeroflex Industries will make a debut and open for subscription as well. So we'll watch out for that, Snehi. But Jackson Hole Symposium also kicks off.
Absolutely, Shrishti. Jackson Hole Symposium kicking off from August 24th to August 26th, and the Fed Chair Jerome Powell will speak on the economic outlook. He will be giving more insights on that. And the last meeting, Powell also told reporters that the Fed would make rate decisions meeting by meeting, but emphasized that officials intend to keep the key policy rate restrictive until they're confident that the inflation is coming down to their target of that 2% or is somewhere around the comfortable band of 2%. So let's see what will happen at this meet as well. Followed by that, we will also be talking about the stress that China's real estate sector as well as overall macros are seeing, and how this will pan out for our economy and our sectors as well. And lastly, we will also be talking about some general news, and we've got news that Vikram's soft landing on the surface of the moon will happen in the next week. Remember that Vikram is done with several rounds of orbiting around the moon and will touch the surface of the moon next week.
Okay, so let's get started, and let me welcome on board two of our special guests. Firstly, onto the technical side, we are being joined by Rajesh Palviya, as well as we are being joined by Ajay Begga to guide us what's all happening in the world across and what to expect next. Very good afternoon, and thank you so much, gentlemen, for your time to ET Now. Rajesh, I'll come to you first, because we want to understand from you, where are you seeing Nifty 50 as well as Bank Nifty headed for the upcoming week? Because we have a lot many factors that will be in play the crucial one will be Jackson Hole Symposium, and the global markets are not on the positive side. So how do you see Nifty as well as Bank Nifty placed currently?
Good afternoon, Shrishti. So this is the fourth consecutive week where we are seeing, sustained selling pressure is taking place on the Nifty as well as on the Bank Nifty also. Nifty is now slipped below to its important support area of put base was at around 19,400, and now we are trading below to those level. Nifty is approaching to its next critical support area of 19,200 if we look at the overall call put concentration. So 19,200 is having now major put writing activity. So if at all Nifty breaks below 19,200, then this fall may extend further, and then possibly Nifty can slide towards 19,000 level also. On the other end, the call writers are now shifting their position on the lower strikes. So major writing activities witnessed during the week around 19,400, 19,300 strike. So looking at the overall data setup, looking at the near-term setup, we expect that whatever minor pullback, if at all we see in the market towards 19,400, 19,500, that will meet again to the supply pressure on the higher side. So it looks to be negative bias for near-term setup. Range for the coming week would be around 19,450 to on the lower side 19,100. This could be the possible range we can see for Nifty. On the Bank Nifty is slipped below to 44,000 level, and the immediate and critical support area for Bank Nifty is at 43,600. If at all Bank Nifty breaks below 43,600, then this down move can extend further towards 43,200, which is the next major put base for the coming weeks. So for the Bank Nifty, we are projecting range for coming week is 43,200 to 44,200. So this could be the possible range for Bank Nifty, but bias is again on the negative side. So sell on rise is the strategy for Bank Nifty also.
All right, thanks Mr. Palviya for your view. This is Snehi also joining in the conversation. And Mr. Bagal, let me come to you then. And the Jio demerger is expected to list on Monday, and Reliance has also shown some excitement about this because the stocks saw a recovery in trade on Friday, and the listing price is expected to be 261 rupees. So do you think it's going to list at a premium, at a discount, and how do you see this listing panning out?
Nidhi, I won't talk about a particular stock.
All right, no problem. Let's move on then, and let's also, okay, fine, we'll talk about the Jackson Hole Symposium then. Are you expecting any key commentary coming in from the Fed chair, and how do you expect this to pan out for the American markets and the spillover for our markets then?
Yeah. It is a strategy setting kind of a seminar. Last year, if you remember, the markets were quite optimistic going into Jackson Hole. But the Fed chair speech was very hawkish, and we had seen a major sell-off post his speech because markets were very surprised by his hawkishness. This time around, markets are going in with a lot of pessimism built in because the US economic numbers are coming through very strong. If you look at the Atlanta Fed GDP now number, that is showing an unprecedented 5.8% prediction of growth for US in the quarter three. 5.8% for an economy of the size of US. That's unheard of kind of numbers. Only in the post-COVID recovery, you could probably have seen a number like that because of the base effect. So very strong US economy, pretty resilient US consumer, and a persistent inflation. These are the things he will talk about. Market has more or less factored in that there is a slight probability of a November rate hike. September doesn't look likely. What could spoil the party is if he once more, like last year, says that 2% is our target and the market is complacent, we are higher for more. All those things we have heard. But if he again reiterates that we don't think our job is done and I see further rate hikes, that could roil the markets. So interesting week coming up. Jackson Hole, normally no rate action takes place. It's only policy formulations. They will discuss what are the learnings from the last 3 years and how right they were last time around and how do they look at the future. So very short speech. I think he'll stick to script and he will more or less deliver a hawkish but a pause kind of a message. If he says we are going to raise more, that will really set the cat amongst the pigeons.
Okay, so we'll wait by and watch what kind of a comments that we get in. Fed Chair Jerome Powell also expected to speak there. So interesting week ahead. But Rajesh, just touching upon the Reliance move on Friday's session post the announcement of the Reliance Jio listing that is on Monday, we saw a sharp spike coming in. So how do you see Reliance is placed currently, and how it is expected to support the Nifty 50 index indeed?
Yeah, so in second half, some recovery was there just because of Reliance Industry only, and stock again recovered from the 2500 support area. Looking at the near-term, short-term setup on the higher side, 2600 is having major call writing activity. So if at all Reliance Industry manages to cross about 2600, then there would be a short covering action we can see in the stock, and then this rally can extend towards 2640, 2660 zone on the higher side. But looking at the near term, the range for the stock is 2500 to 2600. So either side breakout or breakdown will decide the major direction for the stock. But since last 3-4 week, there is a buying interest from the lower level, and stock is holding about to its long-term moving averages. So still for long-term view is on the bullish side, but for near-term we are expecting some range-bound behavior. The interesting move can be witnessed only above 2600 level. So that level needs to be watched on the next week, whether we able to cross this level or not. So above 2600, yes, one can take a trading bet also for short-term momentum towards 2640, 2660.
All right, gentlemen, thanks a lot for your opinions and your views. But stay with us because we'll slip into a very short break and we'll be right back with more news and updates on the other side.
Welcome back to Your Trades on ET Now, where we are carrying the discussion on the outlook of the week ahead with Ajay Bagga as well as Rajesh Palviya onto the show. And Ajay, coming to you and just wanting to understand how are you seeing the whole China situation playing out? Why I say so, because China's economies appear to be slowing down. The central banks are cutting their rates when we are hearing a lot about the inflation across the world. So if China or the dragon, when they are sneezing, can that be beneficial for Indian markets? Can this aid the fund flow for the Indian markets? And how concerned should we be when we are seeing China economy? The reports are not that positive.
Yeah, I would be concerned because it's the second biggest economy and nearly 35% of this year's growth in the world was going to come from a Chinese growth. And we have seen from JP Morgan to Nomura to Morgan, all are reducing their outlooks for Chinese GDP. The bigger issue is what's been shoveled under the carpet so many years. The local government debt, if you look at that, it's about $13 trillion. The shadow bank AUMs are about $3 trillion. So two of those companies have started defaulting. They have about $100 billion of assets under management, which they have lent out. Nobody knows exactly how bad that situation would be. Just looking at the scale, $3 trillion is equal to a British economy. $13 trillion is the third biggest economy in the world, and that's the outstanding at the local government level. So very highly leveraged country. 25% of GDP coming from real estate, which has not been doing well for the last 2 years. Somehow the policymakers this time around don't seem to be as concerned or as resolute in actual action. The normal noise is being made, but they're trying to manage the narrative rather than taking solid action, unlike in 2008 and in 2015, when they came with big bang stimulus measures to contain the issue. So now the risk right now is of contagion, that how big is the fallout from the shadow bank crisis and from the real estate developers going bust. Today, Evergrande filed for bankruptcy in the US courts. That is a known story for the last 2 years. $300 billion is their exposure. So we are again throwing billions and trillions around without actually knowing how deep is the rot. That is the trouble with China. Will India well, $7 billion odd have come out of the Chinese equity market in the last 1 month. We have not got inordinate amounts of inflows. My thinking is more that if there is a sell-off, further sell-off in China, there will be an emerging market sell-off, and people have made more money in India. We could get a heavier sell-off rather than in the short term money coming in very fast. Yes, eventually when there is a reallocation, like Morgan Stanley ranked us at #1 amongst emerging markets, put an overweight, those benefits will come eventually. But right now it's risk of, based on the sheer scale of China and because of the opaque nature of the government machinery, where we don't get data and we don't know exactly how deep the rot is.
Absolutely. Mr. Palviya, let me come to you then. And Nifty has declined for the fourth straight week and is also at its 6-week low. So amid a market like this, what are the picks that you are spotting for us?
So some of the stocks where outperformance is there, we are having bullish view on the stocks. First stock is Bharat Forge, sustained uptrend in the stock. This is the third consecutive month where stock is showing good strength. In today's session also there was a long built up. So Bharat Forge is a buy for upside target of 1,000 rupees. Keep stop loss of 952. Another stock which we like from F&O segment, that is Adani Port. Adani Port, whole Adani Group stock has shown good traction in today's session and long built up was there. So Adani Port we like for next week. Upside target we are projecting 875. One can buy with stop loss of 815. And third one is Jyoti Lab. Very strong buying action throughout the week, and stock is holding above all its important moving averages and showing good buying interest. So we are projecting target of 375. One can buy with stop loss of 325.
The top recommendations coming in from Rajesh, but with this gentleman, we'll let you go on that. Thank you so much, Ajay. Thank you so much, Rajesh, for joining us today and helping with your outlook for the upcoming week. But with this, viewers, let's move on. And as we have been talking about, that the next week is going to be a really interesting one. But what are the cues that you need to be watching out for, apart from Jackson Hole Symposium kicking in?